That's the word coming in from Abhishek Mandari on where the market and more importantly where earnings are headed in the near term. But let's just focus on one sector where everyone's been really pinning their hopes high, and that's the realty sector. Let's welcome on board Niranjan Hiranandani, the MD at the Hiranandani Group, and I also have with me Pavitra Shankar, ED at Brigade Enterprises. Both of you, thank you so much for taking the time out and speaking with us. Pavitra, if I could start the discussion with you. Nikunj and I were just chatting about that there will be at some point when the input cost pressures are going to hit the realty, industry as well. As high and as at the peak the demand may be, but considering most developers are still not pushing on to the cost prices onto the consumers because, demand has come back only since the last year and a half, that's bound to hurt you guys at some point.
Hi, good morning, and thanks for having me. Yeah, definitely it is a cause for concern. It's definitely going to put pressure on margins. But I think most developers have realized that we do need to increase prices. It's been quite a few years since developers have been absorbing what should have been a price increase in the real estate sector due to the lack of demand, due to the disruptions in the overall industry since 2016 and demonetization. So I think many of us have also had good quarters over the last few years where we've seen demand pick up, and we've seen that there is actually a very strong, expectation for structural growth in the residential sector, at least. And we feel that there is affordability amongst consumers as well. It's been a few years since many people haven't been able to travel. They haven't been doing a lot of discretionary spend. Interest rates are low. So in general, affordability is pretty high, especially among the IT sector, which is a big demographic for most of us real estate developers. So I think the plan is to try and push prices as much as possible. It's not that it hasn't been done over the last few quarters. I think many of us have been doing that, and especially at Brigade, wherever possible, we've been trying to do that in order to control the margins and continue to give a good product out there. So it will be a challenge. It's yet another challenge for the industry coming off of very, difficult times. But I think that's the only approach that's going to actually work.
Mr. Hiranandani, hi, good morning. Could get a little tricky, right? Increasing prices just when demand was coming back.
There's no option really, but look at the other side of the story. Salaries are going up, and most of the segments, the salaries are up. The recruitments are taking place very fast. IT sector is actually back to the booming segment. So we do find that the demand in all these sectors have really shown an increase in it. All our finished goods, which were kind of languishing over the years, have actually been just taken up and wiped out. So we don't really have any old stock lying with us. And the work in progress is also getting picked up. So all in all, I agree with Pavitra when she said about the low cost of interest on home loans is actually been a very, very big push. We do see, and the statement coming from HDFC Bank, which says that their cost of funds will even come down lower than what it is today, which means are we going to get a lower than 6.5% interest rates for the future? That sounds fantastic for the industry. Also, we do see another segment which we did not see earlier, which is actually the pickup of the commercial sector, which is slowly coming back into the normal. People who are only working from home are now coming back to offices, and quite a lot. So we do see a demand in the commercial sector, which I think will ultimately do it. So the cycle is positive. GDP growth of 8.5% plus is also indicative that demand for homes is really going to go. A combination of low interest cost on home loans, demand in terms of people who are doing it. Last one, but not the least, which I would have talked more last year than this year, is the work from home. People who have stayed at home are actually looking for bigger homes and better homes in terms of upgradation of their homes, either the quality or the size, subject to affordability. With the interest cost on home loans being done lower, they are actually going in for a larger size flats, so apartments, and with more facility. I think this is a demand which has not been actually measured by the market, but it is definitely over there. A combination of all these four factors is really doing it. Challenge? Of course, we are challenged. Any and every industry is going to face the challenge of the cost put into it. Prices are abnormally gone up. Steel, which was once upon a time 42,000 a ton, is 84,000 a ton. Cement, which we were looking at 260 rupees a bag 2 years, 3 years ago, is 400 rupees a bag. Bricks, ordinary bricks, 6,500 is now 8,000 rupees. So all these items, and forget, every item has gone up. Tiles, paints, sanitary ware, fabric, aluminium, all the factors have gone up. So you are going to see a price rise. And the affordable segment, you will see a price rise immediately, because there is no margin over there left for them to actually absorb or continue to absorb it. So affordable segment, in fact, you will also see a price rise in this quarter or next quarter, definitely. This is my reading of the marketplace, because I don't think the affordable housing segment can afford to absorb this price without increase in prices at the segment.
Sir, Nani, good morning. Nikunj also joining in. If I look at, let's say, the price of a house which a builder is selling at, there is profit in it, there is cost of raw material, and there is cost of construction. Can you broadly tell us that what has been the average cost increase in the raw material cost? Because that in a sense becomes a benchmark for us to understand that by how much prices will go higher.
So on an average, the cost of materials have gone up by 10% compounded per annum. So that is the kind of increase we have seen in the materials cost and other costs which are taking place at this point of time. So that is there. And since in the affordable housing segment, the cost of inputs and others is a larger part of total cost, that segment gets pressurized much more than the other segments of the housing market.
2020 was all about selling the unsold inventory. 2021 is where the new launches have started. Now that new launches are started and prices have moved up decisively, are you consciously looking at least a 10 to 15% hike in pricing?
Not across the board. What has happened is something different has happened. Every segment is not able to do it. In certain areas, too much material has come into the market at the same time. So obviously in those segments, you can't increase the prices. But where there is already an absorption which has taken place, for example, in the MMR region, originally everybody, I'm talking about the region as a whole, we had got 5 years stock languishing just 2 years ago. Today it's 12 to 18 months stock. So in work in progress. So obviously the price rise is possible over there. Somewhere where you find that the absorption is lower, so you can't say across the board. This kind of statement doesn't work across the board. It depends on A, location, B, it also depends on the kind of capability of the developer in order to be able to wait for the sales if the price is not looking profitable. Both these things will become effective in terms of how the market is going to behave. So there are segments where you will see a 10 to 15% rise. Incidentally, Pavitra also mentioned it, that some price rises have already taken place. We have also increased the prices almost 5 to 10% across the board. And this has been absorbed by the market. So I don't see a problem in that, because the capacity of the house buyer has also improved over the last 1 year.
Mr. Hinandani, good morning. This is Nayantara joining in. So while you talk about the purchase power of a home buyer going up, will the real litmus test be now, when you continue to raise prices, we're also going to see home loan rates go up, whether it happens on Friday when the RBI monetary policy meet outcome is known, or sometime a little known in the future, because everything else will also get more expensive.
Tara, no, I don't think so. I think home loan rates, even if they go up by 25 basis points, I don't see any negative effects. 6.5% was unheard of. Nobody ever dreamt that they would get long-term loans of 15 to 20 years at 6.5%, plus availability of the income tax benefit also being there. So even if there is a 15 to 25 basis point increase over a period of time, No. But remember one thing, there is huge competition among banks and financial institutions to give home loans because the NPA of home loans is less than 2% across the board through the whole country. So there is a competition in order to take the retail home loan with them rather than anything else. So even if you see some price rise in terms of the interest cost, I think it will be absorbed by the market over a period of time. And most of us who are taking home loans are taking a fluctuating home loan depending on the marketplace. So even if it goes up 25 basis points in the next 2 months or 3 months, it doesn't really matter because it may come down again as inflation gets corrected. So I think on an average, in the future, all your home loans is not going to exceed 7% max, and that is quite affordable with most of the home buyers.
Pavitra, coming to you now, you have a strong presence in South India. So as the property market makes a comeback, will you look at new geographies? And I was talking to a developer here based out of Delhi, NCR, and they said there's almost a competition among banks chasing developers, to partner with them to offer deals to home buyers. Is that the case? And would that be encouraging for you to also diversify your portfolio?
Yeah, on the geographical diversification, we've been very clear that our strategy is to focus on the southern markets. We think there's a lot of opportunity here. Brigade is a multi-domain developer, so it is useful for us to get into a market where we can do residential, commercial, retail, hospitality, and all the different domains. So we feel as a developer that wants to be in the game for a long time, it makes sense to invest into networks in that market, understand the local, the preferences of the customers, and understand how to build in that particular geography. And we feel that where we're looking, which is Bangalore, Chennai, Hyderabad, and somewhat in Kochi as well, that there's enough opportunities for us. We do get asked a lot about entering other markets, but this is kind of our focus. On the second question on financial institutions, I actually think there's a lot of opportunities that they are also able to, send to the way of developers, because they are getting some assets back where they need to actually figure out who's going to take over and actually redevelop the assets, either taking on an existing plan or maybe relooking at the entire investment and starting from scratch. So we have been evaluating quite a few of these opportunities, and there are some that seem worthwhile and worth going ahead with. But again, we're focusing on the southern markets rather than Mumbai, NCR.
Pavitra, what I found interesting when you were talking about the areas you would like to focus, the buzz is really there in the property market when developers start snapping up land parcels in smaller towns. They start talking about tier 3, tier 4 cities. Has that happened?
I think that is a strategy for many. For every organization, strategy is not just what you do, but you choose not to do. Brigade per se, we have had a strong presence in tier 2 cities in Karnataka. And while that has been great for us during our growth phase, we felt that at some point the tier 2 markets are not deep enough for our presence. It's also difficult to sort of spread your efforts across many different tier 2 cities and hope that a couple of them are going to end up being as great as maybe a Bangalore or a Pune story, right, from 25 years ago. So it's a little difficult to call that. And we've sort of taken the call that we'll focus mostly on large cities. And as I mentioned earlier, we find that there's a lot of opportunities there. So we'll play to our strengths.
Okay, with that, I'd like to thank both of our guests for joining us live today on this edition of The Market. We wanted to get a sense of what's really happening in the property market. Prices have gone up. They will go up a little more, as we've heard from both of our guests today, but demand remains very, very robust. We'll move on now and